Now, how do you actually plan for these costs? There are a few steps I recommend. First, assess your current assets. Walk through your building and identify your systems. Then evaluate the condition of these systems, such as the roof, HVAC, paving, flooring. And remember, it isn't just major systems, though. Everything has a life expectancy and remaining useful years. Identify all of these items. Second, create a timeline. What is the projected life expectancy of each item? When was it put into service? How many remaining useful years of service are left? For example, if you have an HVAC unit with a projected life expectancy of 15 years and it is 10 years old, you only have 5 years of remaining life. Third, set aside funds now. Don't wait until the roof starts leaking to start saving for it. Set up a reserve fund that you add to each year so that you have the money when you need it. How do you do that? There are two basic methods. One is to determine the cost on the date it was put into service, then add an inflation factor and run the life expectancy years, including the inflation every year. That will let you know how much you should set aside every year to have money to replace or retire that unit. Second, if the unit is already in service, like in our example, you can determine the replacement cost today, add inflation for the remaining years, then divide by the remaining years to determine how much needs to be set aside. Obviously, the latter method will put a heavier financial burden on your budget as there is less time to save the needed funds. Lastly, use tools like the life cycle calculator from eSpace. These tools can help you account for inflation, material costs, and labor so that you're saving the right amount today for tomorrow's repairs.